All right, everybody, it's me, Greg Manarino. It is Monday, August 5th, 2019. Well, let's start off with the basics. As I am doing this video blog, stocks are getting hammered across the board. The Dow Jones Industrial Average is down nearly 500 points. But again, that's not where you should be looking. I'm going to cover a bunch of things with you, but I want to show you this real quick so you can get a handle on it. Nobody, and I mean this, nobody on YouTube that I know of, or anywhere for that matter, is explaining to you the danger that lurks in the bond market. I've been covering this at length over the last couple of days. Yesterday I talked about this in my Markets and Look Ahead segment. I want you to look at the 10-year here and the 30. I would call this collapsing. Again, I've explained to you all for a very long time, years, that the Federal Reserve is powerless to stop the longer end of the curve from dropping. They can mess with that short end of the curve, the federal funds rate, cut rates, all they want. It doesn't affect the long end of the curve to any large degree. And if you ask me, right now we've reached the point of no return. And again, this is going to more than likely accelerate without very drastic moves, which would rattle the markets even further. Again, we have a situation right now that really should wake you up. And again, let me show you one more thing, going back to the bond market here. I've been explaining to you the importance, and I talked about this yesterday at length, between the 2-year, which is 1.61, and the 10-year, 1.76. That gap is continuing to narrow. We are going to get a full tilt inversion on the yield curve. And I cannot stress this to you enough. In this environment where this stock market right now has no connection with reality, and I mean absolute zero, there is no bottom. I can't stress this enough to you. People laugh when they hear things like there is no bottom. There is no bottom to the stock market. You have to understand. And another thing you have to understand is stocks, the market always overreacts. Again, let me put a perspective on this for you. The last meltdown, the Federal Reserve stepped in and started firing salvo after salvo at this market at Dow 6,000. Where was the bottom? We were at Dow 12,000, a little above that. Dow 6,000, they stepped in. Where's the bottom? No one knows where the bottom is. I know we're near Dow 27 or Dow 26,000. The bottom could be Dow 2,000. We don't know. No one knows. It's no man's land. All we do know is this market is out of touch. Beyond belief, off the Richter scale, overvalued by every metric you want to look at in an economy that is failing. Our economy is in free fall. All that's supporting this market is easy money, debt, which the world may be saturated in. We literally have hit a point, in my view, of maximum saturation again, or we are very close to it. You're going to start to see some very desperate things occur. Let's talk about what's also hitting this market right now. So we know that China just hit back with some retaliatory action against the tariffs. Market doesn't like this. China does not seem to be rolling over and playing dead like our president seems to want you to believe they're going to do. Absolutely not. And China has also devalued their currency. Now, let's put a perspective on that. For months, the president has explained that he wanted a 100 basis point cut to the federal funds rate. We got 25. All right. Very unhappy about that. He's also explained that he thinks the dollar is too strong. Now, let me ask you, even if you're new here, if China just devalued their currency, what do you expect the president is going to want the Federal Reserve to do? Exactly, devalue the dollar. I have explained to you now for a few months that the next phase in this entire thing is going to be dollar devaluation. People, it's right in your face. Sometimes I scare myself. I don't have a crystal ball, but I can tell you this. Look, For those of you that are going to get offended, please, maybe you should click out of here. I'm going to say one sentence here, and I want you to think about it. This president is the easiest man to read in world history. No world leader has ever been as easy to read as this man. We know what he wants. We know what he's going to ask the Federal Reserve to do. There's no doubt about it. I mean, he's a terrible general, and he is right smack in the middle of not just a trade war, but now what appears to be an escalating currency war. He's the wrong guy in there. All right. This was a terrible miscalculation in my view. Let me cover this too. So the president, the day after the Federal Reserve cut 25 basis points, for which he was very unhappy about, he tweeted about it, he spoke publicly about it, he wanted a 100 or a full percentage point cut to the federal funds rate, which won't do anything to stop the long end of the curve coming down. I wonder if he actually realizes this. I really do. Maybe I give the president too much credit. I say, he did go to Wharton Business School just like Raj Rajaratnam did, the guy who ran the largest insider trading scheme in the history of the world. I don't know what to say about that. But that's the truth. Both criminals, that's the truth, went to Wharton Business School. The president he made a terrible miscalculation here. By hitting China with more tariffs the day after the Fed lowered 25 basis points, it was done for one reason. One reason and one reason only, to force the Fed's hand to lower rates faster. Now, understand, look at the ramifications of what just happened. So the president turns around and tries to pull off this covert kind of backdoor way to get the Fed to lower rates, and look what China does. They hit back with retaliatory a strike with regard to the trade war, and they devalue their currency. Let me explain this to you. See me? I'm way ahead of the president with regard to what he's going to do. Could you only imagine what a team of men in China, how far ahead they are? The president is an open book. It's his weakness. It really is. In some ways, it may be his strength, too. But in this environment, it's his weakness. And China is exploiting this to the highest order. I'm not saying anybody else might not do any better. I don't think Hillary would have done any better, or any of the current people running. I don't believe any of them would have done any better. They need we need a president, number one, who doesn't lie to the people. I sincerely believe that if the president were to sit here on national television and level with the American people, explains that we got troubles here. Our economy is failing. We need to take action. This is what's going on with China. This is what they're going to do. He could outline this, I think, because I would imagine he knows what they're going to do. He had to, and I'll explain that to you right now. The president realized, so he's not that stupid. The president realized that by hitting China with more tariffs the day after the Fed lowered the federal funds rate 25 basis points, he realized it would hurt the U.S. economy. Okay, he knew it was going to happen. He realized the Fed would have to step in, but it was a terrible miscalculation because he did not have the vision to realize what China was going to do in retaliation. Now look, we are going to get a dollar devaluation here. I want you to understand that. Now, it's going to decimate the middle class even harder. Everything you buy is in dollars. If you live here in America, most likely that's how you transact. It's our main mode of transaction. If you're transacting in dollars and they get devalued, what does that mean for you? It means you think your grocery bill was expensive last week? Wait till you see what's going to happen when we get this currency devaluation. This is great for the multinational corporations. It's great for Wall Street, the dollar devaluation. And a lot of this bleeding off of the market may plug it. Once we get it to a certain degree, again, we have to watch that yield curve. But this does not help you. The president calling for a significant cut in the federal funds rate moving forward, which is going to happen. It has to. You understand? And a dollar devaluation, what does that mean? Sit back and think for a moment. It means overt, in-your-face, quantitative easing and more debt. Look, we have a debt crisis of epic proportions, not just around the world, But here in the United States, you're not supposed to know that. And the way our politicians are attempting to repair it is by adding more debt to a situation that's in crisis. You understand? It should be very simple for you to put these things together in your own head. I really do break this down into the most simple way so it's not confusing to people. And I think I do a damn good job at it. So let's summarize here real quick. We have stocks under a lot of pressure right now. We have a yield curve in collapse, all right? We are watching right now. You and me are on 2 to 10 inversion watch. The spread's continuing to narrow. They can't stop it. We've hit the point of no return. But a lot of desperate action is going to be put in play here to try to keep the stock market propped up in the face of a full tilt yield curve. You understand? I explained to all of you, look, you have to admit, if you've been following my work for any length of time, I do not believe, and I could be wrong on this, and I'd like to hear you enlighten me if I'm wrong. With regard to these markets, I don't think there's a guy anywhere that has his hand on the pulse of all this more than I do. And I'm not looking to toot my own horn. I just work hard at this like you have no idea, around the clock. And that's why I bring this to you. I want you to understand where we are, where we're going. It's very simple to see, people. We're looking at a worst case scenario with regard to not just the stock market, but a debt market meltdown, the likes of which I don't think anyone is on the planet is prepared for, what it actually means in the grand scheme of things. If you want to get an inkling of this, just go to Google and put in these words: global debt and the human bubble. Global debt and the human bubble. This is an article I wrote years ago, which will outline for you the problem that we are all about to face. And again, just what you can expect moving forward is exactly what I've been telling you to expect for months. Dollar devaluation is the next phase here. An escalation of a trade war, an escalation of a currency war, and people, mark my words, the wrong man right now is in the White House to handle this situation. And I'm not saying again, because I know I have to say it so people understand it, that there's another person that maybe would have been elected or is even running for election now that can handle this. I don't think so in this environment. We're in a lot of trouble. We're in a lot of trouble here, people. We really are. I don't know another way to put it except for the fact that understanding that there are a few fallbacks here. Number one, bet against the debt. Become your own central bank. Hold hard assets. And I've explained to all of you that means you should be holding cryptos too. Have you seen what's happening to cryptocurrencies lately? Since I've been telling people they should hold it up, 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 up. I mean, look, I don't pull this out of a hat, people. I don't sit here and make this stuff up as I go along. This is all I do. I study these markets around the clock. Again, I don't think there's a guy out here who has a better handle on these markets than me. I really don't. And I'm happy to say that, and I'm proud to say that. And I work very hard at it for all of you. We are responsible for each other. I'm out here because I feel that I live that. Okay? I'm out here because I believe in what I am saying. I don't just walk the freaking walk. I excuse me, I don't just talk the talk. I walk the freaking walk. And that's what I want you to do. I want you to walk the walk too. Start getting together with like-minded people, understanding what's about to occur, what is occurring in front of your face right now. This should be very, very clear to you. And again, I try to make this as simple as I can. Most of what you need is on my website, traderschoice.net. It's installed for free. Take advantage of these things. There's a nice chat room there, and there are some very smart people that are dwelling in that chat room. And I watch the chats. I participate. So you want to learn something? Go to my chat room and understand what's going on around you, people. All right, look, this video is awfully long, but very important and very critical. Please share this video. Get it out there. We know what's going to happen. We know what the president is going to call for. In fact, he's already did this morning. He's telling the Fed to look at what China is doing. What does that tell you? He's going to have to institute more quantitative easing. People, we are in free fall. Do you think that our president or any politician would be asking for rate cuts and dollar devaluation or quantitative easing if we were reeling in a booming economy? It's a lie of the highest order. Don't buy it. Don't buy it. And I know if you follow this blog, you're smart enough to see straight through the piles of manure that are in your face, because it's all lies, it's all dog shit. Anyway, please share this video. Getting hyped up. Keep your eyes on these things. Really, honestly. I'll see you later.